Hi, this is lesson 1.2a, introducing a very important concept that will go through all systems of financial accounting. In particular, it's called double entry. Double entry, that means something is entered twice. Transactions are always entered twice. If they're not entered twice, well, then you won't get them balanced. So this bookkeeping, which is financial accounting, bookkeeping, is based on the principle that there's two aspects. There is a giving aspect and a receiving aspect. In everything that we do, it's even if you buy something, you're giving money and you're receiving something. That's what a cash transaction. So every accounting transaction has two sides, a giving and a receiving. Now, we're not really going to be calling them giving and receiving. We're going to be calling them debits and credits from here on in. So your debit is DR and credit is CR. DR, debit, is receiving or in. Always remember that. So debit, your debit is always in. So you'll debit the account that the value is going into. Now, most of the time when we're talking about value, we might be using the term value. Value generally means, goods, money. Most of the time, that's really all that it'll be. So you just use the word value because you don't know. It covers everything. So you'll debit means in, so you'll always debit the account that the value is going into, and you'll credit the account that the value is going out. So credit is out, debit is in. Credit is the giver. Sometimes it'll be the giver, yeah? And debit the receiver. Yeah? Now, and if an item is entered on the debit side of one account, it has to be entered on the credit side of another account. That's a transaction. There's a giving and a receiving in every transaction, and the totals must equal. Now, the next concept that you have to understand. So the first one is debit in, credit out. That's the first really big thing. And the second one is, please remember, you are the business. You're not anybody else. You're not the owner. You're the business. The owner is different than the business. You're always doing the accounts of the business. So you look on every transaction from the point of view of the business, not from anybody else. Now, the business will always be either the giver or the receiver, but there are a couple of occasions in the next lesson where there may be the giver and the receiver in the same transaction. But for the moment, we're just going to have a look at how the business is only going to be one part of it. So in other words, if I just take an example, any example, say that the business paid rent, yeah? Now, the business is giver. So the business is paying. That means the bank is going to come out of the bank. Say it's €1,000. You credit the bank. Why? Because the business is giving money. The business is giving. The business doesn't have one account. The business will have thousands of accounts. So whatever account it's coming out of. So the business is giving money. That's why you credit the business, and that's bank. And this is going for rent. So you're going to debit the rent because that's where it's going to go over here on the debit side, €1,000. So giver, receiver. Credit the giver, debit the receiver. Okay, now if just leave you with a couple of questions. The next session is going to be maybe using examples more. So the first one, this one we're after doing, is mainly on theory. So if I leave these questions with you, see what you can do. All right, does debit mean in or out? Debit most definitely means in. Is the giver debited or credited? The giver is always credited. Are you doing the accounts of the owner or the business? Always the business, never the owner. You're doing the accounts of the business. Why are there two aspects to every transaction? Well, there is a receiving aspect and there is a giving aspect. And again, just to remind you, the receiving aspect is debit and the giving one is credit. So you're going to credit the giver. Now, the business will always be either one of those, and you must decide what it is the business giving or receiving. If it's goods, well, it could be sales. If you're receiving it, it could be purchases. And if it's payment, well, then it has to be money. All right, so next session, we're going to take some more examples like we've done up here. We've just that paid rent one. So we're going to do more examples in the next lesson.
If you like this video, you'll love our notes. You can get some for free in the link in the description of this video.